The communications sector is one of this year's winners, but can it last? This is Sectors Up Close, and we're talking communications services. The sector is one of 2025's strong performers, up 24% so far, and is forecast to outpace tech this year. Of course, partly that's because some of the biggest tech names, Meta and Alphabet, are in here, so this is partly an AI play. But streaming services, traditional broadcasters and telecoms flesh out the sector. Matt Miskin is co-chief investment strategist at John Hancock Investment Management. Matt, how much of this rise is about AI?
It is a big part of it, and AI has been the strongest earnings driver globally this year. You're just really seeing it in the earnings results, and communication services has the earnings to back up the strong price performance we've seen in the sector. We think that's actually one of the best fundamental catalysts. But the thing is that it's not as expensive on a PE ratio basis compared to technology stocks. So tech is more concentrated in AI. It's more expensive. You can get a lighter version with cheaper valuations, but still strong earnings here in communication services.
For technology companies that make hardware, though, it's fairly obvious how they're making money from AI. Are the big names here, Meta and Alphabet, managing to show investors that the scale of their investment in AI is paying off?
So you're seeing different services as it relates to the search side that is adding new ways of generating content or information for people, which should rely or create more attention or more usage on the search sites. And then social media, you're seeing it's just about eyeballs and clicks. And the eyeballs are getting more and more attracted to these screens here. It's almost inelastic demand as AI has developed better ways to keep us ingrained into our screen. Unfortunately, I don't really like that. And I have two daughters. I'm trying to remove the screens the best I can. But with this AI technology, it is a powerful force that can really help generate more eyeballs.
Talking of eyeballs, among the broadcasters and the streaming services here, a recent buzzword has been consolidation. The big story in the last week has been that David Ellison, now owner of Paramount, is allegedly planning a bid for Warner Bros. Discovery. That would bring two of the biggest companies in this sector together. What does that tell us about the sector? Are there too many streamers?
So the media side has been one that has been more cheap. So you do have within this sector more expensive stocks that are those that have more on the tech side. The media side has been cheap for a while, and you're trying to find ways to unlock value. M&A is a way to do that. So when these acquisitions take place, there usually is a value premium that's placed on them. It creates value creation in terms of shareholders, and that's a catalyst. That's another catalyst underneath the hood of the communication services sector, and it's one that's actually provided a bit of a tailwind as of late.
What would a deal on that scale mean for the sector, though?
Yeah, so I think really you do see consolidation in media. I think media, in terms of its earnings power, is still relatively attractive. The valuations are cheap. And then you're broadly seeing these acquisitions, and it probably isn't going to stop here. Frankly, the way to grow in this space is probably more acquisitions, mergers, and then finding ways to cut costs and run efficient businesses. You add all that up, it is another potential positive catalyst.
What about the less glamorous names here, like telecoms companies?
So this is the defensive part. So communication services do have these boring old telecom companies, but I go back to this inelastic nature of telecom and more just our iPhones or phones that we're using nowadays. Some have said that basically people could live off of a phone and basically not have a TV, not have other things that are more discretionary. Because of that, it gives these telecom providers, and they're almost near monopolies, this inelastic, very stable cash flow, good dividend paying stocks, and they're more defensive if the economy does slow. In other sectors, you don't have this kind of defensive buffer within sectors where it's something that has this boring tilt, more dividend oriented. So you have it as a nice kind of complement to the higher growth names within the space. but it's actually something we don't mind because it can be something that is more defensive if the economy does slow.
It sounds like you're positive across this sector, Matt. Would you buy the sector as a whole, or should you be picking and choosing? Are there names to avoid?
So we look at, at the sector level as a compelling opportunity. Again, the markets have been on a very nice run. Really since the April lows, we've seen this tremendous run. It is a momentum market, and we're seeing actually investors chase other parts of the market that really don't have the fundamentals to back it up. What we like about this sector is it does have the growth prospects. It is a bit concentrated, so we wouldn't want to decrease other parts like media or telecom because it does add different things for you, like the M&A activity, like the defensive side. So we would take it as a whole, but more broadly speaking, it has the fundamentals to back it up. If you're going to be looking for places for upside in what has been a momentum-driven market, we want to be careful not chasing things that aren't as positively, fundamentally supporting these returns. We think communication service is a great place to look.
That was Matt Miskin of John Hancock Investment Management. Don't forget, you can watch more videos on Reuters.com.